All right, good evening, everyone. This is Ajit Mishra from Religare Research, and we are back with yet another session of Religare Technicals. So, markets are under pressure. So, definitely, we're going to talk about the key indices and the stock sectors that one should keep a close eye on. But before that, let's get started. This quick disclaimer is important because the idea behind this webinar is to share our insight. It's not a trading or an investment recommendation. So please take advice from your financial advisor before making any trade based on the insight shared. All right. So without much ado, markets after a week of pause. Last week it was a breather after 3 weeks of decline. Market was up nearly 1.5%, and this week we have surrendered all the gains. So Nifty, Sensex both lost nearly 1.5%. Almost retested December's month low, close to around 17,775 was the low, which we've tested in December, and we have almost retested that zone in today's session. When it comes to sectoral performance, you'll see majority of the names barring the defensive on the losing side. So media again tops the list. Then we have IT, banking, reality, financials. So banking and metals, largely were helping the index to hold till last week. But now with the decline in banking, the tone has changed, and again we are seeing a little bit of buying interest, or I can we can say that a bit of recovery in the FMCG pack and select pharma counters. In line with the sectoral performance, you would see within the top gainers list, you'll find two names from the life insurance basket: HDFC Life and SBI Life. So after prolonged period of underperformance, we have started seeing a bit of recovery. SBI Life was anyways trading around the record highs, but HDFC Life have witnessed a very strong recovery last week. Apart from these two names, two stocks from the energy basket, BPCL and NTPC, which did well, and one stock from the metal space, Tata Steel. So despite profit taking in the metal space, Tata Steel could manage to end with gains. Now, when it comes to the losers, then Bajaj Twins top the list. Very sharp decline in both Bajaj Finserv and Bajaj Finance in the passing week, roughly around 8 to 9% kind of a cut. Then we had JSW Steel, which is among the top performing stock from the metal basket, which witnessed profit taking and lost nearly 5%. And then Coal India and Infi. So Infosys is right now underperforming the large cap basket. So be it TCS, HCL Tech, Infosys, Wipro, the cut is much severe in Infosys, and in fact it was anyways struggling below the long-term averages, while HCL Tech and TCS till yesterday was maintaining with the positive bias. But today, of course, both these names also witnessed profit taking. Now, what to anticipate next? So this is the weekly graph of the key index, the Nifty index. So you can see that last three candles, a week prior, we've tested 17,800 mark. This faded line, yellow line you can see here, that's 20 days of exponential moving average that we tested. Last a week before, we managed to hold that zone and ended marginally in green. And again, we are retesting that zone close to around 17,800. So this is the third time the index is testing this area. So what has changed in this last 3 weeks is, earlier we were seeing a bit of outperformance from the banking pack, which was capping that damage. But now banking is also trading in tandem with the market, means with the Nifty index. So situation is definitely pointing towards the negativity to continue. The only thing is that we may see a bit of recovery after that initial dip, but upside seems capped considering the overall structure among the index majors. So the overall structure looks weak to us. So the key levels that we are eyeing next is this 7750 was the low of this candle, this red candle. Once we break this, then this trend line, the upper band of this broadening formation would act as a support, which comes closer to around 17450. So we have discussed this levels, when we were at these, mark earlier. Okay, below 17800, we expect this decline to continue towards this upper band of this broadening formation. So that views remain the same. Upside 18180 to 18350, that zone would continue to act as a resistance zone in case if there will be any decisive rebound. So keeping in mind the scenario, it's obvious, it's very prudent that one should maintain short positions also in line with the market trend. But it's not any particular sector that you can pinpoint or any particular stock. You have to be very much stock specific, especially in the market like this, wherein we are seeing mixed trend within the sector. So it's not that all stock from any particular sector are witnessing pressures. Just to give you an example, though the banking is weak, but the PSU banks are not witnessing a similar kind of decline yet. So which is opposite to what we used to see earlier. Earlier, the PSU bank used to witness sharp cuts, but this time around, it's the private banks which are witnessing pressure. So ICICI, today it was SDFC Twins, Kotak, all were really under pressure, but the damage is comparatively lower when it comes to SBI, Bank of Baroda, Canara Bank. These are the top three names which we usually discuss and recommend that in case if somebody is looking at the PSU basket to go long in. So keeping that in mind, it's very important to maintain stock specific approach, but yes, maintaining shorts is very critical. Now comes the next index, the critical index, which holds the key. So banking index. So in line with Nifty, you can see that a similar kind of a structure, a red candle, then a breather last week and this week also, red candle almost engulfing the gains of the last week. So not completely engulfed means it's not completely covered the this green candle, this entire positive move. So still we are in comparatively better position when it comes to banking index so far. When it going to change once we break this low close to around 41,500 zone? In case if we fail to hold this level, then this pressure would increase. Why I am saying this? Because this zone, you can see the previous swing highs also, that also coincides closer to this mark, and then this swing low also is there. Then 41,100, 41,000 would be the area basically where it might going to take a support. Upside 42,550 to 42,900. So earlier 42,900 were acting as a support, and after this breakdown, this decline, it would act as a resistance. So as of now, as we were discussing that when it comes to preference, private bank is something that we prefer, that we continue. It's just that from a trading perspective, one should be looking for short trades also. So just to give you an example, that SDFC Twins have finally witnessed the breakdown, so we can look for shorting position through put options. Similarly, Kotak Bank, we are seeing pressure. But at the same time, if you're an investor, then this is an opportunity to accumulate these stocks also. So from a trading point of view, yes, this pressure may extend, but the trend is not reversed yet, especially when it comes to the medium to long term trend. So from that point of view, one can utilize this opportunity in this way also. PSUs, be very selective. SBI, Bank of Baroda, Ken Bank, these are the three names. They are still, holding ground. SBI, yes, we are seeing a bit of profit taking at higher levels, but it's comparatively, stable. But so far, we won't recommend, adding to the position in these three names. But yes, ICICI after the recent decline, and SDFC Twins after 3-4% kind of a cut from the current levels. Excess is anyways holding strong. So these are some of the names which one can gradually accumulate from the medium to long term perspective. Now coming the coming to the stock specific part, which all stocks sectors which are holding strong. So from the defense basket, Forge, it's holding very strong. So you can see that it's a weekly chart. The stock is at the record high. So after breakout from this consolidation pattern, we are seeing this, trading in a very narrow range. Last week also it ended with the marginal cut, a small red candle. So that clearly indicates that bulls are still in control and one can utilize this phase to accumulate. So if you remember the last time or maybe before that, we discussed about Marico having a similar kind of a structure, that we are not seeing any damage. The stock was witnessing in the very small range. So usually in a market like this, and especially this is a low beta counter, we don't usually see a very strong swings also. So it's an opportunity. In case if you wish to accumulate, you can definitely look for buying in Bharat Forge. Next on the list, so in the beginning we talked about FMCG doing well. So within the FMCG space, Godrej CP is something that we like. And why we like this stock? So first, after this uptake, we saw a marginal decline in the stock, which pushed the stock below the major averages. It formed a base around the lower levels and followed by a breakout, and then we have a higher base this time around. So just to add to this, the FMCG basket also looking comparatively better when it comes to the sectoral performance and sectoral positioning. So be it HUL, Britannia, ITC, Marico, all these stocks are looking sideways to positive to us. But the best name that which looks very firm to us is Godrej CP. And as a disclosure, we have recommended this to our clients also. Now comes the critical part, where to look for short positions. So as we are saying that the Nifty tone looks negative to us, we can see this decline extending towards 17,450 levels also. So Naukri, that is InfoEdge, is the first stock that one can keep a close eye on for shorting positions. Why I'm saying this? It's a weekly chart. The stock after that this decline is trading in a triangle pattern, and finally it had a breakdown this week. It slipped below the lower band of that pattern also, and the long-term averages on the weekly charts. So double whammy for this particular counter. So we expect this negative trend to continue. So Naukri, InfoEdge can be considered for shorting position. Last on the list, we have IT counter, Tech Mahindra. So almost similar kind of a structure. A steady declining trend followed by a consolidation it's not exactly a triangle pattern. It's kind of like a similar structure. And then finally, a breakdown from the same. So we believe this, decline is going to extend in days to come. So with the, this zone as your stop loss, one can look for shorting this trade. So just to sum it up, when it comes to Nifty banking index, Nifty looks comparatively weaker because we have almost retested the December month low, and below 17,800, this pressure may increase. 17,450 could be the area it might retest. In case of rebound, 18,150 to 350 would be the zone where we see the index facing resistance. Banking also trading in tandem, but it's still comparatively strong when it comes to the weekly structure. 41,500 is something that one should keep a close eye on. So 17,800 and 41,500 is something that one should closely watch in both these key indices for the next directional swing. When it comes to stocks, Bharat Forge and Godrej Consumers, we discussed on the positive side, and negative side, Naukri.com and Tech Mahindra, which look weak to us. So yeah, this is all from the presentation part. Now we'll do a quick poll followed by the Q&A session. So please quickly fill your feedback, and then you can start posting your question using that Q&A tab. Please quickly fill this feedback and we can then move to the next segment, which is the Q&A segment. In case if you have any questions around these, key indices, any particular sector, please feel free to ask. No individual stock specific queries that, what we are anticipating in, Bajaj twins, just to give you an example, because I understand that people may have positions, and if you are associated with us, you can definitely write to us. But otherwise, the idea behind this webinar is to disseminate what we are seeing as a broader structure of the market, not the individual stocks. Please quickly fill this feedback so that we can start with this Q&A segment. And once you are done with the feedback, you can start posting your questions also. All right, let's get started with the Q&A now. Okay. So first question is from Aman on IT sector. So IT as a sector, Aman, is still witnessing pressure. So as we mentioned that Envy was among the top losers, and the other IT majors have also joined in, in today's trade. So we believe, taking clues from the global indices, that Nasdaq Composite is still reeling under pressure. So we are largely trading in tandem with the global trend. At times, yes, we do see a delay. Like for a couple of days, we see that stability at our end, but broadly we are trading in tandem with the global trend. So I feel that this negativity might extend, especially in the IT majors. The structure has changed, means from consolidation to fresh breakdown, and mid-cap IT, they are doing comparatively better so far, but I'm not sure whether they'll be able to manage this tone for long in case if the selling pressure increases. So overall, the IT structure also looks weak to us, and IT majors is something that one can look for shorting position on recovery, on bounce. See, these stocks that we've talked about is not any recommendation. So please don't think it as a intraday or a delivery or a trading recommendation. These are the insights basically. So it's completely upon your discretion that how you'd like to utilize this. I've shared my view that these stocks are strong, these are weak, and how it fits in your trading plan is something that you have to decide on your own. Okay, next question from Mr. Prince on pharma and the steel sector. So pharma, Prince, in fact, we discussed about pharma also in brief, that if you exclude a couple of names from the pharma basket, majority are still, witnessing sideways to negative trend. So Sun Pharma, Cipla, they are the top two names which are still holding around the record highs. The rest of the pack, either they are, witnessing recovery with the pace is very gradual. So stock like Dr. Reddy's, Divi's, Lupin, but they are still, way below their, record highs. And then we have some of the stocks which are anyways, witnessing decline. So stock like Biocon, Oro Pharma. So it's a very mixed trend that we are seeing in the sector. So I would recommend that in case if you're looking for any, buying position in this sector, these top two names can be considered, Cipla and Sun Pharma, and avoid the rest. Within the steel basket, within the metal space, see JSW, yes, we saw a bit of correction last week. It shed nearly 5%. But structurally, JSW Steel and Jindal Steel, they are the top two names. So the idea behind naming these stocks is that even if we are seeing correction, it's an opportunity to accumulate. So from a very short-term trading perspective, yes, it might continue to hover in a range after that recent surge, but they are the best structure that we have within this space. Next, Tata Steel, which looks firm, avoid the rest of the counter in this particular space. See, Mrityunjay have asked around the recession related updates from the US. So this is not the part of Mrityunjay, the presentation. So it's going to dilute the entire conversation that we just had. The idea behind this webinar is to focus on the actionables. So we can't help it in case if something goes wrong globally or domestically. What we can do is to manage our risk. And how we can do that? In case if Nifty is going to slip below 17,800 mark, obviously we have to be very stick with our stop losses in case if we are holding longs. So this is the best thing that we can do as a trader. If you are an investor looking for opportunities in the market like this, obviously we've discussed about private banking names that one can look at accumulating. These theories, like recession at times, COVID, all these are just the reason for market to witness reaction. So I personally recommend you not to go into this direction, and the entire thing get dissolved, because we at times wait for the confirmation and usually see the price moving in the favorable direction and we miss the bus. So as long as these levels are intact, you should continue with the recommended positions and with the recommended bias. Hemant, we have already discussed about metals. Next question we have from Mr. Mayank Chauhan on banking sector. So banking we discussed in detail, but just to reiterate those who have joined us late, that 41,500 is something that you should keep a close eye on. Below that, this decline may extend further, and banking could lead the decline in the Nifty also. So means that below 41,500, 41,000 could be the area it might test, and maybe lower also. Next question from Mr. Benjamin on power sector. So power as a sector, we are seeing mixed trend. I would rather say energy basket, that where in NTPC was holding strong, Coal India was witnessing pressure. Tata Power is reeling under pressure. Then we have PFC RAC, which is in the financing part. They are doing exceptionally well. GAIL from the gas distribution space is holding strong. So it's not any particular direction that we are seeing in this sector. So again, one needs to be stock specific, and within this space, GAIL is the strongest candidate that we have right now from the energy basket. And in fact, Reliance is also looking sideways to weak to us. So for a time being, it's an avoid for any fresh position. So again, it's very hypothetical question that Mr. Rajesh Kumar have asked whether this recent correction has something to do with the upcoming earnings season. So it could be anything. It's just that what we have in our hand is our risk management rule in place. If we are okay and if we are not speculating, means if we are not aware where to exit, in that case we are speculating. In case if we know our entry and exit, then we are trading. So in case if you are aware of where to exit your positions, you should not bother about all these global or domestic events which are lined up ahead. Next on the telecom sector, Satish Kumar have asked. So within the telecom space, we all know that Idea is anyways out. Down and out completely. As of now, we are not seeing any respite in the stock also. So we are left with Reliance and Bharti Airtel. So Bharti anyways is our preferred pick within the telecom space. As a disclosure, we have recommended to our clients also for the long-term bet. And if you see the stock also, the performance also, it hardly participates during the corrective phase, and the pace of decline is very gradual. So that clearly shows the kind of potential the stock has. And whenever we see the market witnessing the favorable trend, it always participates. So this correction that we are seeing can be considered as a buying opportunity in case if your view is long term. All right. So yeah, with this we have answered all the queries which were largely around the focus area, that is the broader indices, the key sectors, and yes. So with this we can end this session here. Thank you everyone for participating, and next week same time we're going to connect. Till then, take care. Bye.